Welcome to my final morning hot charts appraisal on Tuesday, the 9th of February, with me, Rich Perry, market analyst at Handtech Markets. The gold chart is just an incredible run, isn't it? I mean, I've talked about how the strong run higher or strengthening of the yen, pulling dollar yen lower. The gold price is another chart, incredible move higher. Now, the RSI on the gold chart is around 80. And the last time that was seen, all the way back to 2012, when we did get a strong run higher, another strong run. So, is it a big turnaround in this in the outlook long term of gold? Now, you can see here we do still have this sort of downtrend channel in place on gold, but this move that we've seen above 1,190 spot 60 is the first time I think that you've seen a breach of a key reaction lower high. And I think that is a change of sentiment. I think that is a big move, because you can argue that's even a base pattern. I mean, I'm not going to call that base pattern because I don't think gold is going to be a big bull run now, ongoing. I think it's going to be a move that could continue to go higher. I think it's coming up against some key levels. 1,190.60. You see that between there and 1232. There's a fair amount of overhead supply, key highs there as well. And with the RSI so overbought, I think that the upside potential is becoming fairly limited. And not only that, let me show you once again these Bollinger Bands, because at the moment we're sort of trading entirely outside the Bollinger Bands, which is a really stretched condition of the market there. So when you start to see that moving back inside the Bollinger Bands and closing back inside the Bollinger Bands, that could be a potential trigger for sell signal or a profit taking signal. So you need to be careful of that. We're having this run higher that almost looks as though it's going hyperbolic at the moment, which again is a concern, because obviously you have the strength of the run higher, which is good. Run the winners. That's what you're looking to do. However, when that market turns, it can turn very sharply, and you can see a considerable correction. So you need to be very, very careful of that. If you're running these long positions, you need to stick close to that in terms of your profit triggers. Now, the hourly chart shows you, to be honest, it shows you that you're sort of consolidating today. Every day in the past, out of the past four, I think we've basically had this sort of early consolidation through Asia and early European session. Then when the Americans come in, the US comes in to start trading, it just shoots higher, and it's done it every day for the past four, I think, where you've seen the gains in the afternoon. Huge runs higher. Yesterday was obviously a very strong run higher. That actually started sort of mid-morning UK time. But at the moment we've got this consolidation. But again, if the bulls are going to continue to push this higher, I think they're going to be coming back in again. I don't think you're going to get a consolidation day or even a down day followed by further upside. I think that's going to be the case, where we see sort of continued upside rather than sort of a bit of a consolidation and then further gains. But I think that, you need to be aware of that. And the initial resistance is 1,200. in spot 60, and then you're sort of looking at 1205 and 1232. Those levels from June last year, so it was 1205, and 1232 was the May high. So they're the next levels that you need to look out for. But certainly at the moment, the run high is obviously very strong, consolidating again in the near term. But yeah, just be very careful of this market rolling over. So very strong gold chart still. But I wish you good luck in your trading today, and I'll speak to you again tomorrow. Thank you.